Analysts at Meristem expect a bearish mood in the Nigerian equities market to persist and do not foresee any positive triggers that could sway the market direction in the green zone. Meanwhile, the Securities firm notes that the bond auction holding today might hinder flow of funds into the local bourse. Esther Otusanya, a senior investment research analyst at Meristem, joins me now for more market updates as the earnings releases frenzy simmers down. Thank you so much for your time today, Esther. Let me get your thoughts. And you don't see any positive triggers down the line?
No, not for now. For the broad market generally, the broad market is still quite negative. I mean, from last week performance, markets lost about 1.36%, and this is quite substantial. Moving into this week, we still expect that subdued negative mood this week, and the trading day today is a testament of that already, because we are seeing that mixed performance in the market, but generally it is still like quite negative. We still expect the market to close negative today.
All right, now let me get your take on the earnings so far, and your take on the earnings in the first quarter, and what you make of the results that have come out so far, looking at everything with a broad stroke.
Okay, well, for the Q1 2024 earnings, it's largely mirrored what we saw in 2023 full year. For some sectors, like financial services, they were able to like outperform and release like strong financials. But for other sectors, performance was very subdued and very negative, even in some other sectors like telecoms, where we see major like cost line items being impacted, and FMCGs as well, where there's large like foreign exchange like losses that has impeded like profitability, and ultimately even wiped out some shareholders' funds. Like we see Nestle and also MTN and recording like negative shareholders position for now.
Yeah, because when you look at that, the FMCGs and the telcos are judging from the current environment that we're seeing playing out already this year. Do you think it could be more of the same this year?
Yes, definitely. Like last year, the major driver of the performance was the Naira devaluation, and also the inflationary pressure from the domestic economy, which like drove up their operating expenses and even cost items. So this year, for Q1 already, Naira has depreciated up to like year to date like up to 40%, and this is just working in line with what we saw last year. So for their operating expenses, the inflationary pressures are still quite high. We expect that to continue its uptrend. For FMCGs, where they rely so much on importation, like for their cost inputs, we still expect like pressure from that end. Now for FX losses, many of these companies, the nature of their businesses means that they have to rely on debt or foreign currency obligations that will mean that will have to be repriced as the Naira is depreciating. So this will eventually like feed into their performance for the full year, unless if we see a reversal in Naira. That's when we can say, because for now most of these FX losses are not realized yet. So unless if there's a reversal, we can see an improvement. But if the Naira continues on the direction which it is right now, we think 2024 will be the same as 2023.
Yeah, well, because with the Naira, it's hard to tell, because on one moment you are the best performing currency, the next you are the worst performing currency. But let's get to the banks now. A number of banks have made their plans, their recapitalization plans public. More recently, Guaranty Trust Bank among the long list of banks who have given their put out the information here. Let me get your thoughts on the recapitalization plan of these banks.
Okay, well, since the CBN disclosed the new recapitalization plans, and the CBN actually also gave a two-month window for banks to disclose how they intend to meet up with these requirements. And since then, we've been seeing a lot of banks come up to disclose how they intend to meet up with the requirement through rights issues, through raising additional capital as well. So,
but that creates another problem with dilution
exactly,
and for investors.
Exactly, that's why we saw that like sell-off, because investors were concerned about potential dilutions for their holdings in these companies, and because there's just so much uncertainty around how these companies intend to raise the capital. But since we are nearing the end of that window that CBN gave the banks, and we've seen a lot of banks already signified how they intend to raise this capital, so we expect to see that positivity, a bit of positivity creep back into investors, and maybe not full-blown, but at least not as much sell-offs as we saw at the beginning.
But do you think it's going to be more of the same when you look at the performance of the market this year compared to last year?
And not last year was quite dynamic. We saw that that bullish run from like H2 throughout H2, which was quite significant. Markets did so well last year at a record like 35.90% last year. Although this year, the market at the beginning of Q1, we saw the market do like 40% year to date, and that was like the strongest.
Early.
Yeah, that was like the strongest gain in a long while for like any market. So, but we actually also saw that was mainly driven by large cap tickers like Danksem and Geregu as well. So, and since then, market has been quite negative. So,
all right then. We'll definitely keep our eyes on the market. Thank you so much for your analysis today, Esther Otusanya, Senior Investment Research Analyst at Meristem.